Hello there, welcome back to Great Call for Accounting. In this video, we're going to look at a common test of March 2024. So, on this question paper, we're going to look at a question paper from the province of KwaZulu-Natal. So, I'm going to look at a question on the cash flow statement, and that is our question two on this question paper. So, you see that this is our question, and it is got 35 marks. It requires you to spend on average 30 minutes on that question. The question is, we are provided with information relating to Toland Limited, a public company for the year for the financial year ended 20th February 2024. So all the required part 2.1 reads prepare the owner's share capital notes to the statement of financial position. And our question has got 8 marks. So very important take note. So we go to our information that we're given. We're given an information A whereby it's an extract from the statement of comprehensive income for the year ended 29th February 2024. So moving on with the information, also information C, which is extract from the statement of financial position on 20th February. Then D, you're given the shares, information on dividends on E, and information on fixed assets on the F, which is the last part of our information, uh, which means we are going to enter on our F as answer section to try to see what we have. This is all the share capital note for the year ended 20th February 2024. So obviously, all the share capital note, we're going to start with our shares issued that we have at the beginning. So here we can just give a description of shares issued. We're going to put the number of shares, and the value of shares will be in the column that we have on the other end. So what shares issued, we go back to the question to try to see, well, the shares that were there in the beginning of the period. So obviously, we try to look for that information according to what we are given. But we are told that on shares, the business is an authorized share capital of 600,000 shares, 600,000 shares. And then we are also told that 70% of shares were in the issue on 1 March 2023. So I remember 1 March 2023 is at the beginning of the period, and then we also have at the end of the period will be now in 2024, that is end of February 2024. So 70% of the shares, so we are going to say 70% it's 0.7, which is 0.7 as a decimal, then multiply by 600,000. And then we see that the other that we're going to get there is 420. 420,000. So we have 420,000 is the number of shares that we have at the beginning. So here we come here, we put in the column of shares, we put 420,000. And all the value of shares, we are given the value of shares, we put the balance that we are given there. Remember, so on this table, there is just an error there, which means in this column is going to be on 2020, 2023, and then this one is going to represent on 2024. So basically, that's what we have. So if you refer back to at the beginning of the question, you'll see that our year is ending February 2024. So basically, that's what we have. So we come here. We now look for the value of the shares on for 2023. We have got order share capital. We are here. We've got 7,350,000. So we're going to put our value as 7,350,000. So come here, indicate it like that. So we are saying 7,350,000. So this is what we have. So we try to go to the next part. Right, on the next part, we are going to look for any shares that were issued during the year or that were repurchased or bought back. So we go to the information given here. That's where we can get the information. So if you go to the next point, saying 50,000 order shares were repurchased from a dissatisfied shareholder on 1 August 2023, the company paid 37 rand per share. So we now know that this is a buyback or a repurchase, which is going to decrease the number of shares. Remember, a repurchase is going to be is going to cause a negative effect on the number of shares that are there. So we go to our answer section, and under the middle column, we are going to describe them as shares bought back. Shares. Yes, bought back, but if we refer back, we'll see that we've got 50,000 shares that were bought back. So we are going to represent it as 50,000. But as we are highlighting that this is a buyback, so we should show it as a negative. So we shall show them in brackets so that it's a negative figure. And what the value? We need to know the value of the shares, the average share price. Remember, we did the average share price uh, before the average share price that applies to all shares that were issued before. That's the average share price that we're going to apply here. So how are we going to calculate it? We say all the the value of the shares that were issued before the buyback as a numerator, divided by the number of shares that were issued before the buyback. Then we get the average share price. So in this case, we only have we're only given the balance of shares. We only have the balance of shares that we have at the beginning, which is we've got 7,350,000 is the value, and the number of shares we've got 420,000. So we are just going to divide that there. 7,350,000 divided by 420,000, so that we get the average share price that we are going to apply this is a share that we have is the value of the shares that we have bought back on average per share. So if you go back there, you will see that but we are given that we are paid 37 rand per share. So we can only see whether they were whether the average share price was 37 or it was above or below 37 by calculating the average share price. So basically what I'm saying, we are saying the 7,350,000 divided by 50,000. So we can just be able to try to calculate it by saying 7,350,000 divided by the number of shares that we calculated there, which is our 420,000. So we divide by 420,000. So you're going to see that the answer that we're going to get 17.50. So this is going to be the average share price that we are going to use there is the value per share of the shares bought back. So what it means is these shares were now repurchased to the price that is above the average share price. So obviously we know that the difference that is above the average share price is supposed to be adjusted in the retained income note. So basically in this case, we are only concerned with average share price. So we come here, we indicated that they were bought back at 750. They were bought back at 750. So now to get the value now of the shares that were bought back, we are now saying 50,000 times 750. You get 875,000, which is going to be a negative. Remember, we said we are supposed to represent as negative. So that's what we have. So we try to look again if we have got any shares that were then issued again during that year. So the next point says a further 10% of the unissued shares were issued. So unissued shares, we know that the shares that were in issue, we have 70% of 600,000, and when we calculated that, we got our 420,000. So we are saying we have got 420,000. Right. So we are going to calculate the difference, and the difference then we calculate the 10% of the difference so that we can be able to see the number of shares that were further issued. So to find the number of shares that were issued, we are going to say the authorized is 600,000. So we are going to say 600,000 minus 420,000. So if you calculate it like that, you can see that the number of shares that are still unissued. We are going to get 180,000. Or alternatively, we already know that 70% is the one that is an issue. So it means 30% is not an issue. So basically, we are going to say 30%, which is your 0.3 as a decimal, times 600,000. You are also supposed to get 180. So that's an alternative calculation. So from that 180,000 that are not yet issued, 10% were further issued. So you're saying 10% is a decimal 0.1 times 180,000. If you calculate it like that, you're going to get your 18,000 as your number of shares that were further issued. So you come to your answer section, you indicate that is shares issued. These are additional shares that were issued. So you can just write additional. additional shares issued. So we already know that it's now 18,000 of shares that were issued. So when shares are issued, we indicate as a positive this side. Then also on the value now, we don't know they were issued at how much. Because we are not given the value per share at which they were issued. So we are just going to leave it there as blank in terms of uh, the value of the shares that were issued. Because we need to, we should have been given the value at which they were issued, but we are not given here, which means we can leave it as blank and then we come back to adjust it as a balancing figure. So this is what we have. Then we can now put our double lines because this is the last transaction that we have concerning our order share capital note. So we come here now, we put our double lines. So this is what we have. And then obviously, now we can now try to find the final balances by now saying all the column number of shares 450,000 minus 50,000 plus 80,000. Then we're going to get 388,000. That's the number of shares. And then here, we don't have this figure, so cannot find this figure. But if you go to the question, you're going to find the value of the shares at the end, because these are the balances at the end, because we are also going to indicate as shares issued, but they are in the end. They indicate in the end. So you come here, you see that the value of those shares in the end is given in the column of 2024, whereby under order share capital, we've got 6,835,000. So this is the figure that is supposed to come here. There's a 6,835,000. So basically, that's what we have. So we can now be able to find this figure for additional shares issued. So how can we find it? We can just say we can just present it in the formula whereby you're saying 7,350,000 minus 875,000 plus additional shares will be equal to 6,835,000. Then you can be able now to calculate it from that point. So basically, we are saying 7,350,000 minus 875,000 plus additional shares, which we are not given, will be equal to 6,835,000. Then we can make additional shares at the subject of the formula, whereby you're now saying it's equal to 6,835,000. And then we take negative 875,000 to the other side, it becomes a positive, plus 875,000. And then we take positive 350,000, positive 7,350,000 to the other side, it becomes a negative 7,350,000. So you calculate it from that angle. You see that the final answer that we're supposed to get there, if you see 6,835,000, sorry, 6,835,000 plus 875,000 minus 7,350,000. And then you're going to get your 360,000. So 360,000 is the one that is supposed to come here. So from that angle now, you cannot be able to find your value per share for the additional shares. By now saying value of the shares 360, and then we divide by the number of shares, which is 18,000. And we will try to see what we get from there. Calculate like that, so try to see what exactly do you get. So if you divide 360,000 divided by 18,000, you are going to get your 20 rand. So this becomes your 20 rand that we are going to indicate here as additional shares issued at 20 rand each. So this is what we've on the preparation of the order share capital note. So we can go to the next part of our question, whereby we are having 2.2, which means calculate the following amounts for the cash flow statement showing show workings. We've got dividends paid at 4 marks, and then we've got income tax paid at 4 marks. So we are going to start with dividends are paid. So the easiest way to calculate our dividends paid, we are going to just add the final dividends of the previous period plus the current interim dividends. Then you get your total dividends paid. That's a simple calculation that we're going to make. So we go to our question. So we are going to check in terms of what dividends. We have got dividends on E. Interim dividends are of 30 cents per share were declared and paid on 1 September 2023. So we are just going to calculate the interim parts whereby we have big 30 cents per share, which were declared and paid on 1 September 2023. But on 1 September 2023, we know that at the beginning of the period, we want to calculate the number of shares. At the beginning of the period, we had 420,000 that we calculated in order to shake up to not. That were the shares that were there at the beginning, 420,000. And then these interim dividends were paid on 1 September. Then on there was a repurchase which took place on 1 August, which was before interim dividends. So you have to adjust it. So it's 50,000. So we're going to subtract our 50,000 from 420,000. And you see that if you subtract there, the answer that you're going to get is 370,000. So basically, that's what we have 370. Then from 370,000, that were the shares that were there by 1 September 2023. Then we can now be able to say now 0.3. 30 cents, I remember 30 cents is 30 over 100, then I'll convert to a decimal, it becomes 0.3, and then multiply by 370,000 to find the interim dividends. So you see that the interim dividends that we are supposed to find, if you calculate very correctly there, you are going to find it is 111,000. So you're going to get 111,000. So getting 111,000 is your interim. Remember, we said we are going to say final dividends of the previous period plus your interim dividends of the current period. So final dividends of the previous period, you get them in the balance that you are given under shareholders for dividends. So for the previous year, we have 280,000. So these are the final dividends of the previous period. So we're going to say 280,000 plus 111,000. So we say follow answer section 280,000 plus 111,000. So then we're going to get your answer is 391,000. Remember, dividends paid, it's an outflow. Remember, we're going to transfer this figure in the cash flow statement. So as an outflow, as we are paying, we are supposed to show it as a negative because it's an outflow. So it's in brackets to show that it's a negative figure. So this is what we have. So the next calculation that we're going to make is on tax paid. So on tax paid also, we need to come up with a calculation that will lead us to the tax that is paid. And remember, there's a difference between the tax that is charged in the amount that is charged in the statement of comprehensive income is tax, and then the amount that has actually been paid for tax. So we should be able to differentiate between the two. So remember, we can try to bring it in the form of a T account. That's an alternative calculation that we can make using a T account, whereby we are saying we have got the SARS income tax. Basically, it's an income tax, whereby we are saying if we have got an accrual, we have got a balance PT, which is a credit balance be on the credit side, which is an accrual. It will be an accrual if it's on credit side, and then if it's a balance, a prepayment that we have at the beginning, it will be a prepayment or in advance, will be on the debit side. And then the amount that is going to be charged in the statement of comprehensive income, which is for the period, tax for the period will be on the credit side. And then obviously the balance in the ends, if it's a credit balance in the ends, this will be now in the ends, and it will be an accrual to be on the debit side as a balance sheet, and in advance in the end also supposed to be on the credit side. In advance in the end, and it will be obviously your balance as CD. So basically that's what we have. Then the amount that is supposed to be paid will be appearing as paid on the debit side. So this is the amount that we'll be looking for. So we will be looking for this amount. So from this now we can be able now to come up with your formula to calculate your final your figure that you're looking for bank, whereby we are now saying, if you go to the information we are given, we see that we're given SARS income tax, whereby balance in the beginning is a debit balance, which means it's in advance that we have at the beginning, which is on the debit side. So obviously it's clear because it has been indicated as a debit balance. So we come here. We now say we have got balance debt which is 15,000. So we've got a 15,000 on the debit side. So basically we are saying 15,000. And then we also have the balance at the end is 74,000, which is a credit balance. So it's a credit balance, but when we're presenting it as a CD, like what we did here, it will be on the debit side. So we have our 74,000 on the debit side. Then the text for the period, if you go back in the beginning of the question, you're given net profit before tax is 2,730,000, and net profit after tax is 1,911,000. So obviously, we now be able to find our tax amount, which is going to be 2,730,000 minus 1,911,000. Calculate it like that to see that the figure that we're going to get is tax is going to be of 15,000. 15. Let's just try to calculate it with that 2,730,000 minus 1,911,000. Obviously, the figure that we are going to get is 890. Sorry, 890,000. So this is the figure that we have. Remember, the tax for the period we said was the credit. So we're going to say 890,000. And the figure that we are looking for is here on the credit side. So we're supposed to find this figure. We're now saying 890,000 minus, we're now saying 819,000 minus 15,000 minus 74,000. And then you get the amount that we have there. So basically, we are saying tax for the period minus the balance that we are having, the debit balance in the beginning minus the credit balance at the end. Then you get your answer, which is supposed to be 730,000. So obviously here we say 730,000. So this becomes our answer. I'm going to summarize it now. Answer section where we say tax paid it's 819,000. We subtract 15,000. Also subtract 74,000. And the final answer that we are getting is going to be 730,000. And we are saying it's a payment, so it's an outflow, so it can be shown by brackets. So this is what we have. Then we can try to see in terms of the next question that we have, which is now saying complete the following sections of the cash flow statement. We've got the investing activities, and then we've got the net change in cash equivalent. So we can start with the investing activities section. Obviously, the investing activities section is going to be described by the movements of the non-current assets. our fixed assets. So go to our outer section. So on our outer section, we are going to say cash flow from investing activities. Existing activities. Don't go to the information given to try to see the types of movements of non-current assets. So we code where we put fixed assets, but we are told that if all the equipment was sold at carrying value during the accounting year, which means, but we're not given the amount. So it means we need to find the amount. But second point saying extensions to buildings were completed during the financial year. What amount is 4,840,000. So we can be able to work with that one, whereby it's going to show as an outflow. So it means our 4,840,000 becomes part of the purchase or increase of fixed assets, which is 4,840,000. It's going to we are going to show it as a negative. So we go there and indicate it in our answer section. So remember, we got from investing activities, and these are purchases of fixed assets. So we can just write purchases of our fixed assets. And the amount that we have is okay, 4,840,000. So we have 4,840,000. And we are showing it as a negative because it's an outflow. And then beneath that, we are also, on top of that, we have got all the equipment which was sold at a carrying value. So we are going to just use the T account that we open when we are having our fixed assets at carrying value. So balance of fixed assets at carrying value. So you can just refer back to the information that we are given. You'd see that we are given fixed assets. Fixed assets at carrying value at the beginning is 80,031,000. At the end is 12,154,000. And obviously now we are saying we can present it in such a way that we in a T account we have a carrying opening balance at carrying value on the debit side. So we are saying this is the fixed assets. When we are combining all the fixed assets that we have. And we've got our opening balance at carrying value on the debit side, and then we've got closing balance of our fixed assets on the with carrying value on the credit side. And we've got depreciation for the year, we put it on the credit side. And disposal at carrying value, we put it on the credit side. And then additions obviously they are at cost. We put them on the same side. So with that now we can be able to find the figure for disposal at carrying value because we are not given the disposal at carrying value here. So we can find our figure for disposal at carrying value as a balancing figure. So basically that's how we are going to go about it, whereby we are now going to say we are now going to put it again in that form of a T account, whereby we say our carrying value at the beginning is 8,031,000, and then at the end is 12,154,000. So we come here and we set those figures, whereby we are saying at the beginning it's 8 million. At the beginning it's on the debit side, and we are saying it's 8 million. This is the opening balance, so 8 million. in 31,000. Then in the end, we have got 12,154,000. Remember, at the end, it's the closing balance. We are putting it on the credit side. Then we check for depreciation for the year. So we go back to the question that we are given and try to check if we got given depreciation. So you see that depreciation here we have got 247,200 and 164,800. So obviously, if we add 247,200 plus 164,800, you are going to get your 412,000. So here we are saying 412,000 on the credits as we are even depreciation here. So the 412,000. Then our disposal credit value is the figure that we want. Then our additions at costs we have already identified them as 4,840,000. So from there we can now be able to find our credit value as the balance figure on the credit side. So basically we are putting it down in a formula. We are going to say now to find this figure, you say 8 million and 31,000. 8 million and 31,000. And then we add 4 million, 840,000. You subtract 12 million, 154,000. And also you subtract 412,000. We calculate it like that. You see that the answer that you are supposed to get is going to be you're going to get 305,000. So 305,000 becomes the proceeds from the sale of fixed assets, which is a disposal at carrying value. So this is the figure that we are looking for, 305,000. So on our answer section, we are just going to summarize them as proceeds from sale of fixed assets. Obviously, in brackets, we can summarize the working, whereby we'll see our 8 million and 31,000 as 4,840,000. And then we subtract 112,000 and also subtract 12,154,000. And then obviously from there, we got our final answer is 305,000. And these are proceeds, so I will not show it as a positive, it's an inflow. So going back to the information that we're given, also we need to find out any other change in non-current assets. But we see that we have got investment in fixed deposits, which is a financial asset. It's a non-current asset. We are going to a movement from 600 to 625,000. That's an increase. So an increase in fixed deposits, we are supposed to show it as an outflow. And the increase, we are just going to say 625,000 minus 600, we will get 25,000. So we go there and just summarize the search. Just going to say changes in financial assets for just increase financial assets. And in brackets, obviously, we don't want to show the working. Remember, we are saying 625,000 and 600,000, which is what we have here. It was 625. It was 600,000, then it moved to 625,000. That's an increase. Then you subtract the other that you're going to get is at 25,000. And we said if it's an increase, it's an outflow. So show it as a negative. So basically, that's what we have. And then we have exhausted what we have under the investing activities. So you can find the net figure by saying negative 4,840,000 plus 305,000 minus 25,000. And we are going to get a negative the final answer that we are supposed to get should be a negative 4,560,000. And if it's a negative, we leave it in brackets so that it's a negative figure. So basically, that's what we have on 2.3.1. Then we try to see what we have on the next question now. It is saying net change in cash and cash equivalents, 4 marks. So we go to our answer section. Um, so we're just going to show it as net change in cash and cash equivalents. So that's what we have, and we can just maybe try to underline so that we have. So remember, on net change in cash and cash equivalents, we are still going to have our cash and cash equivalents, um, cash and cash equivalents at the beginning, and we also have our cash and cash equivalents at the end. So we just try to present it in such a way. So we can say here we can have a description of cash and cash equivalents. At the beginning. So cash and cash equivalents at the beginning, we go to the balances that we are given there and try to see. So at the beginning is this column of 2023, whereby you're saying we have got a bank overdraft 135,000, and then we also have our cash and cash equivalents 5,000. So we're going to combine the two and get the net figure, whereby we're going to say our bank overdraft will be a negative balance. So it's a negative 135,000. And then we add the cash and cash equivalent balance, which will be a positive. And obviously we're going to get a negative 130,000. So this will be the cash and cash equivalent at the beginning. So it's a negative 130,000. So we come here, we indicate it as a negative 130,000. Then we also have our cash and cash equivalents at the end. Cash and cash equivalents at the end. Remember, if you say net change in cash and cash equivalents, plus cash and cash equivalents at the beginning, we get cash and cash equivalents at the end. So we'll try to find out, but if you go there, you'll see that we are given cash and cash equivalents at the end. We are having a bank overdraft of 0 and the cash and cash equivalents 410,000. So it's only a positive 410,000. So we come here and put our 410,000. So basically, that's what we have. Then from there, we can now be able to find this figure for net change in cash and cash equivalents. So let's present it in the normal way that we know that we say net change in cash and cash equivalents. So it's net change in cash and cash equivalents, and then we add our cash and cash equivalents at the beginning, whereby we are saying if we add, we are adding a negative 130,000. So it becomes minus 130,000. Was a negative and a positive give you a negative, and then from there you get your cash equivalents at the end, which is a positive. So you go to 110,000. Then to get your net change, you now save 110,000, and then you take negative 110,000 the other side, it becomes positive 110,000. So your net change will be now, if you add the two, it's supposed to be, let's try to see what actually you get there. Be 540,000. And you are seeing that it's a positive figure that we are in there. So we come here, the net change is now 540,000. So here we are saying 540,000. So basically that's what we have, that part of calculating of net change in cash of cash equivalents. We try to move on to the next part of the question, which is saying calculate the following financial indicators for the year ended 29 February 2024. We are given debt to equity ratio, and also a given percentage on percentage return on average shareholders. So let's start with the debt to equity ratio. Obviously, you see our question is 3 months. So we go there and try to see debt is represented by non-current liabilities. So obviously, we are calculating for this column for the current day, 2024. And they are given the balance for non-current liability is 1,773,640, which is going to be your debt. And remember, it represents the loan. Non-current liability is a long-term loan. So basically, that's what we have. Then equity. In terms of equity, we have shareholders' equity, 9,335,000. So these are shareholders' equity. So we just come up with our formula there, whereby we are saying this is 2.4.1. We are saying it's debt to equity ratio, whereby we are saying our debt is 1,773,650. As to our equity, 9,335,000. Yeah. So obviously this side should be 1, and then we say S2. So we divide by 9,335,000. Both sides. Obviously here, if you divide, it's going to be 1. So we're going to say you're going to indicate it as 1. It's 1 this side, and then you say 9,335,000 into 1,773,650. You are going to get two decimal places. It will be 0.19. So this is the final ratio that we have, our debt to equity ratio. Then on the second part of our question, it requires us to calculate percentage return on average shareholders' equity. That is the ROSH. So on the second part, we are now saying, obviously, we need to put down the formula first. And this is 2.4.2. And we are calculating ROSH. Obviously, we are saying net profit after tax over average shareholders' equity. So you're saying average equity. Average equity, whereby we are now saying we try to find out the figure for net profit after tax, but we have the extract from statement of comprehensive income that tax is 1,911,000. So we come 1,000, and then we divide by average equity. So with average equity, that's where we have a problem, because we have 9,335,000 is here, 9,335,000 plus 8,040,000, and then we divide by 2. Then the answer that we get now will be your denominator. So we come here, we say 9,335,000. Then we add your 8,040,000. And we are saying with this now, you can find the average divided by 2, which is say just saying half. When you get the total, you say half divided by 2. And then that will be your denominator. And you calculate like that, the final answer that we are supposed to get. But obviously, we know that this is a percentage. You go back to your question, you see that it's actually stated as a percentage. So coming here to your other section, you are supposed to multiply it by 100 over 1, so that it becomes a percentage. So here it becomes, if you calculate correctly, 21.99. And obviously, we need to convert it to round it off to the 1 decimal place, whereby our 9 is going to change our 9 again to become 10. And it's going to change our 1 year to become 2. So basically, we are saying that percentage will be equal to 22%. So basically, that becomes the last part of your question. Thank you for listening. Please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing the core of accounting. More typical examination questions will be uploaded on this channel. So let's get notified. Let's turn on the notification button after subscribing, so that we get notified of new uploads. As for this video, I'm signing out. Let's meet again in the next video.